do it. Welcome to a talk all about money. And we have a bunch of topics to talk about today, but what we're going to do is shift a little bit about the conversation to some of the topics that people have brought up in our little sharing circle we had previously. And so some of the stuff I'll glean over pretty quickly. And just a preface for everyone who's on the call right now, I have the chat open. So if anyone has anything that they want to ask question-wise or pause, feel free to chat into the box. Yeah? Awesome. So first and foremost, just want to do a quick preface that anything you hear, don't take this as a legal directive or feedback that you would otherwise get from a legal professional. And at the end of the day, everyone is different. And if you want something that is more professional, I always recommend working and looking for an accountant that works with other people in the same domain or have people with the same portfolio of finances as yours, so that when you ask questions and find the perfect person to work with, that it makes the most sense. Cool? Yes. Okay, awesome. So there are so many aspects of finance. We're going to shift a little bit about the conversation today, but there are two parts when it comes to money, right? The first part is the aspect of business finance. How are you making the money? Where is it coming in from? Whether it's through the corporate lens or the freelance independent side. How do you maximize these earnings? How do you work with clients? And who do you reach out to? Who do you talk to for support? And then also in tandem to this, we have a little bit that we can chat about on the personal finance side, which is about the aspect of money. And why this is also really important is the concept of money is really psychological. Money is not really a thing, but something that we put value in it because this is what we all share, right? And the example, like you have a bill, we perceive the power of the bill based on our collective perception of it. And so when we talk about money, not only do we need to talk about the more tangible aspect, right, which is the numbers, the contracts, and all of this stuff, but sometimes the relationship that we have with this intangible thing affects the way in which we approach it. Right? Sometimes we have fears around it, traumas, avoidancy, hesitancy, all these layers of it, because this is the relationship we built with this. And this oftentimes trickles into the way in which we conduct the business and finance. So really, when we talk about finance, it's this two-pronged approach. One is more tactical and is one more mental and building a relationship with it. Yeah. Cool. Awesome. And so just a high level overview, the difference between corporate versus freelance flow of money, right? We have different ways in which we can make money through these different lenses. Many people on this call, you're probably in the corporate lens, right? Where you have all these set salaries, maybe you have bonus, maybe you have equity, maybe you have different benefits that give you different funding, whether it's 401k matching or what have you. And for some of us, we're in this freelance bucket where we have variable income based on the clients you pick up, different ways that you can potentially make money too, not just through the lens of working with clients, but you can also take out small business loans, especially during COVID. PPP were the grants that the government gave to businesses to continue running. And in short, it was kind of a big deal for many businesses because PPPs were also forgiven. So essentially companies were given hundreds of thousands of dollars as a part of COVID relief through the government. And also different ways that you can get money too. Grants, you could be a part of accelerator programs. You could be a part of different ways in which different organizations infuse into you as a single entity cash so that you can continue running your business or continuing to create work. And so in tandem, it just splits in these two ways, right? In the corporate lens, you have more stability, but with stability, you kind of offset risk and reward, right? And when you have higher risk, you have higher reward possibly, or the flip side, you can lose everything or have no income, right? So really these two different paths, I always say to people, don't feel as though you have to stay in one or stay in the other, but potentially it's the navigation, right? Between one and the other. Sometimes for people who have mortgages or different things that they have fixed costs that they have to cover, a corporate job may be more lucrative at the time being, right? Because you have a stability that's coming in to help establish all these different finances that you have to figure out and situate. But sometimes for people who have stuff already situated, you might be able to add a little bit more risk into your portfolio. So just like how investing works, also how we use our time, we could think about it through that lens. And for myself, my experience, I was heavily in the, actually, funny story, I started off freelancing in the very beginning, especially when you first start off work. Sometimes it's easier to get into the door with a freelance opportunity because people are hiring for short-term projects or smaller spurts at a time. And so for them, the budgets and the numbers aren't as gargantuan as, let's say, a salary, right? So you might be able to work with a smaller team and have those doors open as the freelancer. But after I had done that for a bit, I went into the corporate world, spent some time there working with many different companies, and in the past few years decided to branch back out myself and start off back in the freelance space, but also incorporating an organization as well. Let's see. What is an RSU? Yeah, some of the terms. So RSU is in terms of equity. So this is for companies that give you part of the stocks as a part of the organization. So this more so applies to public organizations. It can also apply to private, but those you really don't consider cash because it's not really liquid. You like if you left, like it really doesn't mean anything, right? So those are just shares that aren't realized yet. But for RSUs, those are reserve stock units. So essentially they are stocks that the company provides you that is a part of your package. So you sign on. So more often than not, you have designers who work with big tech companies where they have salary, right? So they have this amount of money they make every year just by being there, right? They have the bonus, which is this infusion of extra cash where you can get when you sign on, when you start a company, and also there's stipulations with it, right? Where you have to work like a year to make sure you get it. If you leave within that, you have to pay it back. Also performance bonuses, which are bonuses that are provided to you based on the performance of as an individual or as a company or both together. There are companies that say, if we don't do well, nobody gets a bonus. In terms of equity, the stock options really is depending on the structure of the organization, right? Private versus public. And if it's a public organization, more often than not, if it's one that provides stock equity to the employees, people will be able to directly, either two ways, they'll either buy stocks at a discounted price or they'll be able to just get stocks afforded to them by being at the organization for X number of years. And so many of the big tech companies, what they do is they have a certain number of RSUs that they give people as a part of the contract. And they say, hey, you have to stay with us X number of years to be able to vest completely. Vesting is the terminology they use that indicates how much of the percentage of the package you're able to keep once you leave. So if you say you're 25% vested, that means of this package that they provided as an incentive, you are guaranteed 25% when you leave at this point. And so a lot of the times, many people want to vest up until, the high percentages to get a big chunk of that back into their pocket. Profit sharing is also another way where based on the equity that you have at a company, and this is more so with startups and small organizations, or if you go into a leadership capacity, when the company performs really well, you get additional infusion of payment based on the performance of the organization, based on your stock equity and your shareholder equity. Yeah. And then in terms of benefits, there's sometimes benefits that are afforded that also add additional cash to you. 401k matching, where based on how much you put into a retirement fund, you also get additional money that's paid by the organization, corporation. That's also an incentive for you to stay. And some companies also have a vesting schedule based off of that too. In healthcare, sometimes you have benefits for flexible spending accounts or transit accounts or all these different tax-free accounts that they provide you that you can get either for free or you get at a discounted rate. And then going into the freelance, I'll talk about some of the terms. We talked about the Small Business Association, the PPP, that's just the grant or the loans that turned into grants. But in terms of stocks, you also have the benefits to create your own retirement funds as a freelancer, which is called the SEP IRA. And basically, when you put money in there, it acts really similar to the retirement fund where you put money in and it reduces the overall amount that you're getting taxed as a business. And for people who are freelancing, if you have, and this is, I don't know if you can do it as uh, sole proprietor, but if you do incorporate and you have your own little business, you can put in a substantial amount. Actually, you could put in 25%, I believe, of how much you've made that whole year and have that be tax free. Yeah. So yeah, there's so many different ways to navigate this. And at the same time, just because you're corporate doesn't mean you're going to make less than freelance. Like there's so many different ways that you can basically set different stacks for yourself that help to maximize your earning potential. Yeah. Cool. It's getting kind of dark in here. One sec. Let me turn on my lights. There we go. Cool. So I'm going to run through this real quick. So in terms of the corporate business world, some advice I have providing for you all. In terms of numbers, one of the big ways that they undersell people is usually through the lack of transparency. And so to counter that is really to open up and talk about numbers and how much people are making with one another. And, sometimes it's a little nerve-wracking, scary, but it's also one of those things that, you don't maybe have to share what you have now, but if you've been in a corporation, right, you can definitely share, hey, like when I started out, like I was this, to help provide knowledge and insight to other people at the organization. But at the end of the day, what I always say is, this is what you have. This is like, it's don't, again, money again is a very psychological thing, and we can take away the psychology of it. We can navigate it with a much better lens, right? And so when we have like fear and when we have all these different emotions that are on top of it, sometimes they get in the way for us to either get the right information, right, so that we can make right decisions for ourselves, or put ourselves out there in a way that we can maximize what we can bring in. There are forums and apps, Blind and Fishbowl are two examples, but basically there are applications that have been set up where if you are a part of a company, you sign up with an email and you get access to a specific forum that's a part of that company. And people oftentimes will talk all about like their numbers and everything through anonymous forum. But I always tell people, take it with a grain of salt, just because people are putting it doesn't mean it's also true. Yeah. Blind and Fishbowl are it's more of set up like a forum, but people talk a lot about finance in it as well. And so if you're in the tech world, people just write their entire package, total comps, at what level they are. But also people sometimes like rant about leadership and all these things too. So it's like a Reddit, but specific for companies. Yeah. The next one is just maximizing your benefits. So if you're in a corporate institution, definitely do some of the homework to understand what's offered. And you usually have a benefits administrator, or looking on the right, you have an HR team who go and curate this every single year. So if you're ever lost, my recommendation is seek those people out and just set up a meeting with them and ask them to just run through the benefits with you. They know it like the back of their hands. That's their role. And they're more than excited to ensure that all the employees are making the most of it. Because more often than not, their team is working to do the negotiation, right? To set up these relationships and do all these things to get these benefits. And what's kind of sad is not seeing the employees actually use it. So more often than not, when you ask about these things, yeah, they'll like share with you everything that they know. One other tip I have is, we mentioned tax-free accounts, right? So you might have FSAs or all these different accounts that they provide you with. But my caveat here is, don't throw money in if you're just ending up spending more than you would otherwise, right? Some people just want to maximize it and they throw into it, but then use it on all these different payments that one, they wouldn't have paid for before, but two, you're sometimes, if you go to optometrist, for example, right, and you're just wanting to buy a pair of sunglasses and you're just like, I have to use this FSA, you're paying 2 to 3 times the price than you would get anywhere else outside, because optometrist rarely has sales, stuff like that. And so just one thing to note there is, just because it's tax-free doesn't mean you're going to save money, right? Really do the numbers, play with the budget a little bit so that you make decisions in the future based on what's happened previously, right? That's another mental psychological tip that I'll provide you with all, is base your next day or your financial decisions in the future off of how you behave with money previously. Yeah. More often than not, right? We try to set these budgets up. We're like, oh, I'm gonna do this. I'm gonna do it. Oh, yeah. I'm gonna be so good. And then it just doesn't happen, because sometimes the way in which you set those expectations are really, it's leaps and bounds. We can get there one day in the future, but the more we can root it with how we've behaved, how we've reacted, and how we've managed it previously, and how we've spent, that will in turn help us make better kind of baby steps along the way to get there. Yeah. Who can I talk to when you're a freelancer? The best people are really going to be accountants and also different software and service providers that you're engaging with for different, depending on what you're using to run your businesses. I would say for myself, my accountant teaches me a ton of it, but also at the end, I have links to like Reddit subforums and stuff like that that you can look up for advice as well. Cool. So going into the freelance side, so just dipping ourselves into that water, there's two ways, right? We can manage freelance work. The first way is a sole provider versus an incorporation. So sole proprietorship is taking in money when people pay us and not having to set up a separate, organization. You might have heard S Corp, LLC, but basically we haven't set up an entity with its own EIN, employer identification number. So when we're a sole proprietor, what we provide to other people are our own personal social security number, right? And a couple of things that I've learned over the years. The first one is, when it is about incorporating our sole proprietorship, some of the things to think about, one is, if you're going to create a business, understand that you're going to have to pay every year a little bit of money. It's not that much. And it also changes based on different states that you're in. Some states actually have no fees whatsoever, such as like Nevada, South Dakota, but some like California, you have to pay like $800 a year to have an incorporation. And so really it's around, if you're going to set it up, I would say it's not something that you want to collapse right away. It's not hard to collapse, but it's something that, once you get the gears rolling, I would say think about it more of a long-term investment. But along with that, my recommendation also is, if you are making way more than the incorporation fees, my recommendation is to just do it, because you have so many more benefits that are through different deductions that you can take and all these things that are so different than a sole proprietor, that you would actually end up with more money having just a couple fees taken off with the incorporation than you would a sole proprietorship. The second thing is also legalities, that if anything really goes awry and wrong with a sole proprietorship, anything that your social security is attached to is liable. On the flip side, if you're incorporated as a separate entity, and what's crazy in the US is how we set up incorporation is basically this EIN number, and is essentially a social security number you give to businesses. So these businesses are its own little being. But when the businesses, anything goes awry, only the things associated with the incorporated business, this is a blanket statement. Sometimes there's nuances with it, but generally those things are affected. And so when you can segment these things out, sometimes it's much better for legal lease. Any questions there? This is like a big thing that took me a long time to learn. And I would say an accountant, I would say two parts. The first one is finding the right accountant is helping you do half the battle. And an accountant should not charge you for the first meeting whatsoever. The first meeting is just aligning with them if anyone's interested to find an accountant. And there are also different accountants across different rates as well. Some are very affordable, like $100 or something, a few $100 a year. And I would say it's again an assessment, right? Based on how much you're pulling in and using that to help funnel and set up your business. What was I going with this? Yeah. And so the accountant, generally, you want to find somebody who works in the same business with the same type of clients, but also in the same state. Each state really has different legalese that change year over year. And especially with the presidency radically shifting back and forth, a lot of what Donald Trump instituted really shifted away from what Obama had instituted. And then now the new Democratic Party is shifting away from a lot of things that Trump has shifted. So what I say is many of these things are always in flux more often than we like to have. And an accountant is able to really give you the update year for year. Yeah. And on the contrary, right, you have TurboTax that is generally really accessible for people. It's really easy to use. But the thing I will preface there is the way in which they set up the tax write-offs and how you write things off, they're very conservative, meaning if you were to work with an accountant, you will instantly see that maybe how much money you're able to bring back with tax refunds and stuff like that is very different with an accountant. And generally, I don't know exactly how they do all the calculations and stuff like that at TurboTax, but sometimes I've seen stuff I've put in the past not necessarily be reflected in the tax forms itself. And so they have the way in which they set up the numbers so that they don't want to be caught in the bad position themselves. Yeah. To be clear, sole proprietors where you deposit money, social security number, and corporation EIN. Yeah. If you incorporate, you'll have to set up a separate bank account for the business. You file a W-9 as a business, and that's the form that you give to all employers, right? So they can give you a tax form versus a sole proprietor. So that's when your social becomes all the things that you provide, and your personal bank account is what you provide. Yeah. Yeah, tracking business expenses. So this one's a really big one, and we'll talk a little bit about applications that you can use to track it all. But essentially, when you set up a business, whether it's a sole proprietor or a corporation, you really want to be on top of getting the purchases and the transactions that relate to your business and document it. And the more you can be on top of this will help you to maximize as much as possible year over year. What are you not having to pay extra taxes on? If it's a valid business expense, the way in which the government is set up says that because this is helping the economy with this business transaction, we're not going to tax you on it. So what you're getting taxed on is how much you've made minus deductions and minus other, different gains and other deductions as well. But loosely speaking, some of them could be bank, credit card fees, books, home office, travel expenses, meals that you have with people regarding businesses, different hardware that you buy for the business, cell phone bill, stuff like that. And why sole proprietor and incorporation is also very different is, let's say, for example, credit card fees. You as a sole proprietor can't really write off credit card fees because they're your personal credit cards, right? But if you are in a corporation and you have stuff set up with the incorporation, you can write off the credit card fees that relate to the incorporation, right? So you instantly start to see that there are so many different things that are afforded to an incorporation versus sole proprietor, right? And also to put into context, just like zooming out a little bit, what happens is the business, right, files its own tax return, they file it, and then they in turn pay the individual. And so what happens is you also get paid by your company, right? But then the company that you've created gets all these tax write-offs and all these things, and then it pays you. And so then with that money, you get to decide, what to do with it. But the incorporation is essentially this layer ahead of you that's able to take deductions and things as necessary. Does that kind of start making sense? So then you're getting like the salary from your business as you would as if you were working at like a corporation, for example. But you can see how like working a corporation, like a sole proprietor, you really can't take as many deductions. Yeah. And again, the thing I'll preface is you want to get advice from experts who know this day in, day out, and it also changes quite frequently over time. Also, accountants who work with people in your industry. I mean, my advice is just go on Yelp, search accountant, and set up 30-minute informal meetings with people. Ask them questions like, who do you generally work with, right? Who's your clientele? Is it businesses, individuals, freelancers, right? And sometimes you can say, hey, I'm actually looking for an accountant that works specifically with these people. Can you refer, me to somebody like them? They're generally really good at referring one another. Also, if you have any friends in the freelance space, they generally have people that they work with. Yeah. But my accountant is New York based. So if anyone's in New York and wants an accountant, happy to refer. Yeah. Let's see. Any questions? Just like this is like really broad first, and I'm going to get more into like the specifics. Any questions that are coming up for people? This is more for like a structural perspective of how to set up your business as a freelancer. Yeah. And really, there's so many things that happen in your life that relate to your business that you're not aware of it. And so that's really the big thing is if you are, buying business cards, for example, you need to be writing that off, right? Because that's not something you do for fun, at least I don't hope so, it's just, and you're spending all this, and what I go back to is this is your hard-earned money, right? You put your blood, sweat, and tears into this. And again, the psychological part is don't be lazy with something you put your blood, sweat, and tears into, right? We work so hard to bring it in, and then it's like, I'm too tired now, right? So again, this is really a mental thing that goes into affecting not just the money that comes in, but how do we keep this money, right? And also where are we spending this money towards? Yeah, cool. Let's go on. So figuring out your rate. So I'll give more specifics into the rate, but first and foremost, I would say just go sign up for all the different websites and just see what are people posting. And sometimes when you work with people or you interview with people, you can just ask them what's their budget, what's their rate they're looking for, first and foremost. What I would say is if you go through a recruiting agency, they will tack on anywhere from 10 to 25% in addition to your rate. And so if it helps to put into context, if you do work with a recruiter, the company is paying that recruiter you plus an overhead charge. And so if you want to put that in perspective, now you know how much you can command, right, in terms of rate for your work. What else? But sometimes using a recruiting agency is really, really helpful to get your foot into the door. I didn't put them here, but a couple of them I recommend, especially in the agency space, Creative Circle. They work primarily with agencies and creatives who work in the agency space. And so when agencies just want to have people, they'll reach out to Creative Circle. You have Robert Half, Solomon Page, Aquint, Vitamin T. Those are some really big names. But what I also recommend to people is go on LinkedIn and search creative recruiter, UX recruiter, creative agent, stuff like that, and just message a bunch of them. And especially for those starting off, my recommendation is you want to create really deep, valuable connections with some of these agents because what's going to happen is once they love and adore you and will stand for your work, they're going to throw you in front of everyone. And so when I was in San Diego freelancing in the beginning, I was like baking cupcakes, bringing them over to recruiters. I was like, happy holidays. But at the same time, I was being really thankful that they got me some of the gigs, and I was just like sending them like thank you cards and being really nice. And so that's what I recommend to people here is if you've worked with recruiters in the past, keep in touch with them, send them thank you cards and kiki with them because you never know when one thing might lead to another, right? And more often than not, it's usually out of sight, out of mind. And so they're not caring about you, but they just forgot about you because they're working with so many different creatives, right? What else? So across these websites, I would say they have a lot of jobs posted, both salary and both hourly. And I would just skim through all of them to see generally what roles are open and what are people offering to pay. We talked about the insider websites, also Glassdoor, but again, with all these grain of salt, Glassdoor, especially in big tech, is not accurate whatsoever. People don't really put total comp on Glassdoor. Don't know why, but it's just not listed there. But we'll go directly into rates. Well, the first one is I give you advice. It's taken me a long time to learn. Don't give people rates. Yeah. They're always going to take the lowest number. So just give them the lowest number that you're willing to go. Just be like, this is it. And then add, 10, 20% more just to try. And kind of going to the rule of thumb, you're never going to know how much you're worth unless you just try. And again, this is some of them, you might just throw out a number, it just doesn't work out, right? But observe what happened in the interaction when you put those numbers out there. Sometimes just go for it. Just like throw some crazy numbers and see what resonates, And at the end of the day, the worst that could happen is they say no, right? That's the worst that could happen. It's not, building is on fire or anything like that, right? And so sometimes what you can do is if you already have clients and your people work with, right? And this is just like an extra side piece project that you're going to do, maybe try increasing the rate a little bit, right? And seeing how that resonates. And this is the biggest recommendation I give you all is just play with the rates, but don't play with the rates for particular clients. That's the big important piece, right? So if you have a client and you have a solid relationship, it's not also really good to come back to them saying, hey, it's increased by $5 now. Hey, it's increased by 10. With those, the way I would approach it is as you're playing with rates with other clients to kind of figure out, right, like where you are, where you sit. If you make a substantial shift in a year, I always say when the new year rolls around, just tell your clients, hey, this is like the updated rate. We were here, totally, honor it. Maybe we'll meet in the middle, right? And we'll push you and nudge you towards that, right? Whatever it is, but having like a set kind of book end and book start of when rate shifts occur is really going to help you from maybe having that client that you just were working for pennies for, and then it's like 6 7 years later you're like working for pennies for them again, and you may love them and everything, but again, it's about communication, right? That's another big part of it. And in terms of going into rates, I just generally pull just like roughly based off of my experience plus also what I've seen in the market. And so again, this is really dependent on the portfolio that you have and the expertise and the skill level you bring into the projects. And also sometimes what I will say too is their needs may be very different from your capabilities, right? So you may have very, very senior capabilities, but the team, all they need is production work, right? It's very hard to say, hey, I'm worth this much, even though they just need this done, right? A good analogy I give you is you could be the most famous architect in the world, right? Furniture designer, name whatever creative that relates to house, right? But this house over here just needs the windows fixed, right? And you're like, but I'm the most famous architect. Like, I'm worth like this much. And they're like, but all I just need is this window. And so, it's like the same thing. It's don't see, if people need a certain thing done as a way that defines your value as a whole, right? But at the same time, this is the importance of having variable rates because sometimes the skill set that's needed is very different. Does that make sense? So then you're charging now and you're putting a value to what you're actually delivering versus this is just associated with you as the whole. And why this is also important is, let's say you take on a client that has much lower pay rate, right? Tough luck for them that you can't give them 120, 40% of yourself, right? Because they're not paying up to there. And so this is also another way that you can manage different clients and their ability to pay based on what you're able to produce and put out there. Yeah. So ultimately, at the end of the day, it's a balance, and don't see it as ultimatums, but rather how you just navigate and swim between all of these things. But generally, these are just rates that in the US market, and it also depends on different places in the US, but roughly, I would say when you're an intern, you can make anywhere from up to $25, $35 an hour. It really, again, depends on the company size. But generally, people who start branching out, I've seen people make a good substantial amount just starting out in UX, up to totally $50 an hour. And I would say any more than that, you're starting to dip into the more senior UX category. And also, it's just, again, it's like so blurred. But sometimes I see people trying to get creative directors under what, like $100 an hour, like 75, 50. And it's like, no, you really can't be doing that to people, you know? But also, what I will put out there too is what companies call certain roles may not be the role in which you're asked to play. And so, again, a big question that you can ask people is, what am I asked to deliver? What do you need me to deliver as a part of this role? And that should help you understand, what is it that you're going to be doing? Is it presentations with clients, right? Putting together a synthesis, or is it just wireframes, right? And a good way to convert the hourly to salary, and this is just roughly, is you take your salary and then you divide it by 2,000, or conversely, you multiply the hourly rate by 2,000 to figure out the salary conversion. So somebody making $50 an hour times 2,000, that's about $100,000 salary given a 2,000 hour average work year. So that's about 50 weeks of the year, right? If we count 40 hours a week. But again, you also have to pay, like, I forgot to mention, your health insurance and all these other benefits as your own freelancer that you wouldn't be paying if you were hired under a company too. So anyway, it's a really easy calculation. Multiply times 2, add a couple zeros, or divide it by 2, subtract a couple zeros. Yeah. Helpful? Interesting? No? Yeah. So if there's a client that's first looking for production work and you ask for X amount, later on they would like you and want you to do more complex work, what do you tell them to want more? So that goes into a little bit of the contract, right? So I would say think about it like a receipt, right? And you go to a restaurant, you order different foods, they each have a different amount, right? Are we paying the chef's time for what we're eating, right? Which is very different from buying the actual end result, right? So this is a way that if you see clearly the ask is so different and you want to put it out there in a way that you're going to get paid differently for different asks, is to set up in the invoice, not that you multiply it times X number of hours, but just saying, hey, to do this work, this wireframe is going to cost you a total of this much. To do this type of work with you, it's going to cost you a total of this much. You don't have to reveal your hourly and all these calculations and how many minutes, whatever it took. Conversely, right, you're not seeing in a restaurant, oh, the chef worked 30 minutes, so it's worth whatever. And the rate's variable. You also want to make it simple for them. Yeah. Does that help? Okay. Is it reasonable to say my rate for this type of work is X and the work is Y? It's hard because people don't see things like that. Again, money is perception based. So the example I give you all is like personal finance coaching, but like I have a dollar bill, right? How each one of us looks at that dollar bill is based on our experience of that dollar bill and maybe what it's done for us, what it's bought for us, and maybe what that represents to us, right? all of us see this dollar bill differently, but the dollar bill is the same thing. It's not different, all right? I'm not doing a magic trick, but we all feel differently about it. Same thing goes with rates, right? Or sorry, same thing goes with individual people, right? We don't change as an entity. We're the same person, but the dollar amount that people see us is very different from person to person. And why it's hard to have, let's say, us at this rate and then this rate is because they will always see us as the lowest common denominator, right? Again, that goes back to range. When the perception of a product is this much, that's how you perceive it as moving forward. So another good example I give you is, let's say we go into a convenience store, right? You pick up a bottle of Pepsi, right? The store clerk is like, hey, oh yeah, I'm gonna give you two for 10 cents. Great, right? You come into the store again, you pick up a bottle of Pepsi. What comes to your mind? Oh, I got this for 10 cents last time. This must be worth 10 cents to me. Our perceived value will always anchor back to the lowest perception we have of the product. And so same thing applies to people, in which when we give a range and throw all these numbers, it always goes back to, oh, but they're worth this much at one point, or whatever, unless you have changed it or explicitly stated, I am not that anymore. Like this is this moving forward. Get rid of that from your memory. When these numbers exist in an ecosystem together, they're always going to go back to the lowest common denominator. Yeah. Yeah. Do the analogies kind of help? Yeah. Yeah. Okay. Any other questions? Any other questions? And so, yes, go for it.
So just to understand this correctly with
Yes.
the last point, so your hourly rate times 2,000 equals how much your estimated salary is for the year. Is that what you're saying?
Roughly.
Okay.
Yeah. That's just it's a quick dirty math to get a sense of it. I wouldn't hold it literally, because again, like the benefits that you get could totally add in more of like the total package that you're getting is very different, right? Let's say a company is buying you a house every year and your salary is 100K. Actually, you're getting like a lot of money by being in this job, because that's a total package, right? So that's just a really rough and dirty math of if there are no benefits provided, right? And it's solely based on numbers. Yeah. Yeah. But also you get so many more tax benefits by being an incorporation yourself, so that your take home could actually be much higher. If you make the same amount of money compared to salary versus an incorporated business, if you do the deductions properly, you actually can end up with way more money than if you were working salary. So that's the other like business caveat. Yeah. Cool. Let's see. Let's go through some stuff. Talking a little bit about contracts. So I would say first and foremost, contracts are really important. If it's like a really small thing I'm doing with somebody, whether it's like consulting or not that many hours, I just set up the meeting and I just bill them for it. I have this rule of thumb where I generally try to get the invoice to people as soon as possible so that I can see how people pay. And I base my relationship of who I want to work with also based on how people pay invoices. Sometimes it's really different. It's night and day. People can be all talk, everything is cute, kisses, smooches, kiss, kiss, and then when the invoice comes, where are you at? Where'd you go? And so with this, again, what's worked really well for me is really throwing a lot of different variables out and seeing what resonates and what comes back to me, right? What somebody says, going back to human psychology aspect, what somebody says is not always what they do, right? And so the more we can just put these variables out especially when we're trying to figure out who we want to work with, who we want to have long-term relationships with, especially within the business world. Understanding how people pay, how people, work in terms of timelines and all these things will give you a better sense of is this something that I want to keep pursuing, right? And get everything in writing if it's especially for a much bigger contract. Even some of the stuff that you think is common sense, get that in writing. There's so many templates out on Google. My recommendation is just start creating one, just throw some things together and over time curate it with each new client, with each new project, shift some of the stuff that you have in it so that you start creating something that's really best suited for yourself, right? And why I say this is really important, because at the end of the day, the way in which you want to conduct business is the way in which you want to conduct business, right? It doesn't have to be like anybody else. And sometimes what's going to work really well for you might be really groundbreaking and uncomfortable for somebody else, right? But that's just how you feel comfortable working. Conversely, what somebody is comfortable working with might not make you feel comfortable, right? And so again, going back to what is going to work best for you is what's going to work best for you. And so get all the things that you've learned, the lessons and everything that hasn't worked, and put that into your contract, right? And if a client's like, oh, I don't feel good about this, you're like, this is how I work. I haven't had a good experience with this. So I put this now just to protect both of us, right? That's what I usually like to say with clients is I say these contracts are for both of us. And if there's anything that you would like, as long as I can agree to it, I will also put this in as well, right? Payment terms is, something that works for both of us. Like if I hypothetically have to pay you, these would be my terms. And that's also another trick, especially working with clients, is the more you can use the word we and us, always helps everything in the future. Go back to the bigger picture, the relationship. Yeah. And again, don't be lazy and don't circumvent and cut this off and just go straight into the work. Again, speaking from my experience, I've been screwed thousands and thousands and thousands of dollars by people who I just thought I could trust, but then didn't pay up, disappeared. Yeah. And so along with that, once you set up your contract, it is also not guaranteed you get paid once you set up the contract. And so my advice there is set up these milestones, right? Where these payments come. And immediately once you hit that first milestone, throw that invoice and observe. And also a big lesson that I learned is to not do things for the greater good or just to be a bigger person. At the end of the day, if somebody wants to play dirty, close that chapter, close that book, and walk away. If they already come to the table with no integrity, they're going to count on you to be the bigger person to do the work because they don't care. They don't care about any of that anymore. All that's gone out the window. And so when the integrity is out the window, my best advice is just close up shop and move on. Even if it's going to leave people hanging, if the lack of integrity left you hanging, you can't operate business like that. You can't continue fostering that type of relationship. It's also not going to go anywhere. And so sometimes it might look as though you're like, oh, I don't want to have to do this. But they shouldn't have put you in that position either. Yeah. And that also took me a long time to learn. I'm still learning. Yeah. Sometimes I'll try to make decisions for I'm like, I want to be a team player or I want to make the better decision. But in the world of business, people who are very nasty count on people to do that so they can continue running. Not a very equitable business. Yeah. Sad truths. I know. But we come together, we spill the tea, and we close up shop. Like, no. Let's see. Getting paid. So the terminology you want to use is net X, net 30, net 15. If you've heard those floating around, that means that when you provide an invoice, the net value of that invoice is due in X number of days. shoot for the lowest net amount you can. Net 15 I've seen some people have, but generally I'm whatever with net 15 or net 30. So I generally put net 30. Again, do what best suits yourself, right? But when you get into like net 60 or net 90, that's 90 days after the date of invoicing, not the date of when you finish the work, right? The date of invoicing, creating that little receipt for them that they can pay. And so again, it goes back to, do you feel comfortable with that, right? Seeing any ounce of that only after 90 days, right? And so why I've moved it up less and less is because it's just too big of a window that I don't feel safe. Generally, what I will say is if you work with big institutions, corporations, for example, if you freelance with, you know, name a company, if you freelance with Zoom, right, for example, it's a pretty established institution and it's also public that they're not just gonna see the invoice and not pay it, right? And so sometimes when it's a larger institution, you have a little bit of that guarantee and they have that budget. Generally, where I kind of gets like kind of nervous are smaller institutions, smaller organizations, you know, startups, for example, and having broader payment terms. And another lesson that took me a long time to learn is, yeah, those people do run for president, Ivan. It's the worst. It's the worst. And they also run many of the big tech companies. That's all I'll say. And in terms of also, I don't know if anyone's been in this type of situation, but you've done the work, right? Hypothetically, let's say you're taking on a client, taking on a project, you've done the work, and they are just being a pain in the freaking bum. And you're like, I hate this. I don't want to do this anymore. But you've already done it. You deliver. I'm just going to deliver and move on, right? You want to move on. I get it. You want to move on. But a big lesson that one of my business peers taught me is if you're prepared to take in zero already, invoice them. Who cares? Who cares? Give them an invoice. This is how much I pay. It worked. Here you go. And something around that thinking really shifted my ability to sacrifice myself, right? It's like, why am I constantly sacrificing myself for this bigger vision of whatever it is, right? And the worst that can happen is they say no, right? But if you don't provide the opportunity for people to do that, then sometimes you walk away from things because, again, it's all psychological, right? And in the beginning, when you work freelance, you are probably based on an hourly rate. And so my recommendation there is just have an hourly rate that you set and then shift it accordingly with your expertise, right? That's the easiest way you can navigate the freelance world in the beginning. But once you get more established and you have clientele and you're taking on different projects and you're hiring different people for the team, and then you have blended rates and different, you know, all these things, then you're starting to invoice based on deliverables, right? But that's much later for people. But the context I'll give to you is why, you know, the hourly really doesn't work for people who are much more seniors. Let's say we sit down and I give you an hour of my time, right? It's very different from like an hour of my production work, right? Like expertise, consulting, or what have you, because that's taken how many years to cultivate that, right? And also, let's say you have somebody who's really senior working on something and it's just based on an hourly rate. See, more and more senior people struggle is because the more senior you are, right, the less time it'll take because you just get it. So then why is it that the more senior you are, then you get paid less and less, right? So in there, really then is to think about how do you charge by deliverable. But in the beginning, my recommendation is if it's simpler and to validate how much things would cost and showing the hourly is going to help to validate it, then do it that way, right? But moving into the future, again, why these things shift is because ultimately at the end of the day, to get paid your true value, you're going to have to change the way you begin to itemize your self-worth. When you invoice, do you include federal and or state city sales tax to your invoice? I don't, and I end up just paying it myself, but I also mark it up. Yeah. Yeah.
I asked because with that last project, I included
Yeah.
state and city, and I believe county, for the fact that I will be reporting this on my taxes, and therefore it's money that will be ultimately given back to the state. Federal, I didn't include federal, but yeah, I just started thinking a little bit about that because I'm sure the more money I make freelancing, I would obviously have to report that, and I want to at least recoup or have that sort of cushion room to pay the state back, or pay the state back of the fair amount that is estimated.
Yeah. My advice that's always going to help all of us is go back to your client experience, right? I get we all have to pay all of that, but ultimately, the client experience was going to keep people working with you, paying you, right? So if it's just increasing maybe and factoring it in, and that helps to simplify the client experience, sometimes people opt for that simplicity and they're like, I love it, you know? But for some clients, if it works, totally, again, whatever works best for you, put that in. But think about what it is that you want that client or that relationship experience to feel like. But again, if some clients really love seeing that, more power to that, right? And then put that. But there's many, many different ways you can work around that, right? You can itemize it, put that out. And why I say that is because sometimes has anyone heard the word like sticker shock? But basically, the word sticker shock is when people are shocked at how things are cost, or like the number that things have versus what they perceived it to have. Sticker shock comes out when the perception misaligns from actual what exists. And the more misaligned they are, the bigger shock it is. And the bigger shock it is, people will just step away because they're like, ah. And so sometimes with itemizing the state and all these different taxes and fees on top, end up with the total being really different from what they were paying. And so sometimes that difference, I've noticed for some clients, it doesn't sit well with them. And they're like, and sometimes, and why I ended up baking that just into the rate is because that's just a rate. That's what they get. And we're like, hey, we're going to work 10 hours. They can calculate that immediately and see exactly how many 10 hours is going to look like if we're just billing hourly for that project. Yeah. Yeah. Does that help, Ravi?
It does.
Yeah.
I like that I like what you just mentioned now, make it simplified so that your client is not gonna be shocked at what they thought and what they're actually receiving. In my proposal, and I'm using the word proposal here because it was
Yeah.
a proposal, I
Yeah.
did bring it up to him and he agreed and he understood that. I just think he didn't understand
How much?
that it would elevate it a little bit more. And I'm like, well, he's a sole proprietor himself. So I'm like, don't you issue sales tax or state sales tax?
Yeah.
So I'm not like, like not, I don't know what the word is, like shocking you, but I just we mutually agree to this, and
Mm,
orally, as well as him signing the proposal. It wasn't a contract. He wanted a
mm,
proposal of an itemized list of services. And
mm,
I indicated to him that I am going to issue city and state sales
yeah.
tax. I'm done with it. I agree. Thanks. That's it. So I was like, okay, we're good. So,
Mm,
so I'm just curious. Yeah.
yeah. Yeah. Yeah, if it works, it works, and just sometimes that's my other tip is if it's working, you don't
Yeah.
have to like over architect it and
Yeah.
like try to like overcomplicate it. But I would, yeah, it's one of those things where also what people say is very different from how they behave, right? I've had a client where we've agreed to some things, showed them the numbers, and they're like, and like all their behavior completely change after that. Oh, how's the number? Yeah, 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 yeah. But it's like what people say is very different from maybe how they're actually reacting to the situation. Yeah. And the more that you can start to, again, throw the variables out there so that you can understand better based on what you put out there, the more you can make the decisions on behalf of either the proposal client or what have you, so that you can best situate yourself, your project, and everything. Yeah. Anyone else have any other questions? These are good. Cool. And then the last part with this section is in terms of applications, tracking your business finances. There's a lot of different applications out there, but my personal favorite that I recommend people to just start using, even if you're sole proprietor, this is going to save you so much headache in the future, whether you're using TurboTax or an accountant. Just start tracking your business expenditures and how much you're making. And at the same time, it creates invoices for you. And it also tracks invoices for you, and it could send reminders to people for you. And it's so powerful, and it's free. It's completely free. It's not like huge and popular as FreshBook, but FreshBook is also not free. But the organization Wave, I've been with them for quite some time, and they're all about empowering small businesses with resources. And if you become a bigger organization, then they charge you for some of those things that bigger organizations need, like payroll, for example. But anything that's for like a single person doing the work, you can get so much just for free. Yeah, highly recommend. And you can set up sharing permissions too. I forgot to mention that. So you can have, an accountant or whomever look at your books, and they can go on through their own login and see. Yeah. Let's see. We could talk a little bit about, I have some notes on just budgets, scope. My recommendation is always to, once you've come up with a number, right? It's like, this is how much this is going to cost. These are the number of hours it's going to take me to work. Always to just take a step back, depending on also the size of the client. If it's a smaller client, right, an individual person, or just a very small organization, generally it's going to be a tighter budget, right? And especially if it's an individual person, it's going to hit home a lot deeper, right? And so it becomes more personal for them in terms of this business expenditure. And so with that, sometimes the way in which we prepare the contract or the scope should be the way in which we can approach the relationship the best, right? So that's a good way I kind of want to put out there, is try to shift the way in which you're creating what this project is going to cost based on the relationship you're going to build with this person, right? And so with that, another thing to keep in mind too is just the actual cost of things. And generally where I see this is people who come from an agency world, who've worked in the agency space. You work with a big agency, for example, and you've seen some of the contract these big agencies do. And then where I see a lot of freelancers kind of fall through the cracks is try to replicate that with just themselves individually. And what I will say is take a step back, right? And what, as the person who's receiving the contract, right? Because you want to put yourself in the shoes of someone also receiving this, right? You look at the price and you're like, oh, wow, it's going to cost that much, right? It's not to say you have to knock down your price in particular, but I usually see this with people who come from large organizations, like big organizations who charge a lot. For example, some of the big agencies charge for website redesign easy for $500K to $6-7 million to $20 million for website redesign, right? Crazy, right? But imagine if you're an individual person and you're like, hey, it's going to cost me 20 million to do this for you. It's like, whoa, hold up, right? It's a little different, lost in translation, because an agency provides different services to the client, right? You have all these levels of hierarchy, you have all these checks and balances of people who's going to confirm, deny, well, just make sure it's running, right, operationally. But you also have the name of the agency, meaning the agency isn't just going to drop the project, right? Understanding when we're individual, we are also very much volatile. And while that's not to make us worth less, it just puts into perspective, right? If we want to charge the same thing as this premium product, then we're going to have to build a team, right? Build a small agency, build all these things, right? And then we could start charging what we see ourselves compared to. But the exercise of stepping into the shoes of the client, just looking at it, is just looking at what are you offering, right? What I like to say is, as an individual, or when I'm working myself or a small team, what people get the benefit of is flexibility. And I really index on that. And sometimes I will set up contracts that will be much more flexible, where it's setting up retainers, right? Where we have 10 hours a month that we work together on. And I'm like, we can figure out what we want to do that with, but you get that. And so this is also another form of differentiating yourself as a product compared to, let's say, an agency. You think an agency is going to be like, hey, you get 10 hours a month of us? No, no. They want contracts, they want numbers, they want things substantiated, right? They don't want unknowns. But as an individual, that's really your source of power, is how you differentiate yourself from these maybe gargantuan beasts, right? And in terms of scope, my recommendation is, the more unknowns you have about the project, make it more loosely defined. If you have no idea what it is that you're going to build and you don't even have the inputs yet, say you're going to create a contract where you're going to work 40 hours together, and then you invoice them after that, right? Again, multiple points here. The first one is invoicing as soon as possible so you understand how they're going to pay, right? Don't work like 100, 200 hours and then provide that invoice. No, 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 no. Provide it soon, little spurts, see how they pay, and then choose to continue if they're going to pay, right? But the second part is, if you don't even know what's going to be the final artifact and you're like trying to quote all these things, what's going to happen is, if they blow it out of the water and out of proportion, then you get screwed to have to deliver at this price point that you had no idea. And so sometimes what I would do is I'll say, hey, we can set up a contract where we have X number of hours. We'll sit down and we'll do discovery together, right? Discovery is basically creating artifacts, whether it's journeys, personas, or things. That's a part of understanding what it is that we're going to build, so that we can better understand, right, what's needed. And then once things are more defined, then I'm able to get a better estimate that I feel comfortable with. Sometimes if it's a website redesign, the website already exists, obviously, right? You can look at that and say, okay, I get a sense of how much this is going to take. And then you can budget accordingly. But worst case scenario is you define the scope. It's going to cost this much, optional based on this many hours. And then what you could do is you could do a scope change, addendum, or what do they usually call it? Oh, shoot, I forgot the term. But anyway, basically it's another contract that you create that adjusts the initial scope. But generally those aren't taken really well, because the expectation for people is what you quote is that's what it's going to cost. A good analogy I like to provide is, let's say you're renovating a home, right? And you're working with a contractor who's like, yeah, we'll do everything for 50K, the whole home, you got it. And you're like, amazing, right? And let's say they're starting to work on the project. First weekend, it's going to be 100K. 2 weeks in, it's going to be 300. I'm not saying it's not worth that much, but how do you feel as the home owner, right, in that position? And so I usually do these like mental tricks of, let's take the scenario of like design out of the situation and put yourself in a different situation, right, where you're in the receiving end, and start to run the similar scenario. What is the feeling that you're getting? And usually that mental exercise allows me to have a different form of empathy, because sometimes, again, psychologically, we're so attached to design and design as a craft that sometimes that begins to shape the way in which we conduct business. And those two can't be intertwined so passionately, because then we're not able to open our eyes to see what is actually happening, versus now we're like defending our creative practice versus establishing a solid business relationship. Does that make sense? So the homeowner analogy I really like to use, especially for myself, because it allows me to get outside of my head in terms of the way I define scope. And let's say I'm an architect and I see a plot of land, right? How would you think about coming up with a quote, right? How can you even come up with a quote, right? And so again, similar to design work, creating websites, application, what have you, if there's nothing provided, you cannot be so certain that's going to cost this much, right? And so do yourself the favor, but also the relationship with the client a favor and make it more open-ended, or at least have a smaller milestone, right? Where if I was you know, building the home on the empty plot of land, I would say, hey, you know what? We're going to first start with building the foundation. I feel comfortable giving you a quote for that, right? And I feel comfortable building that. And that's it. That's all we're going to do together, right? Same thing. You can do that with a design project. We're just going to work together to build out these journeys, these really rough wireframe. That's it. I'm not even going to get into the design with you. Like, this is all we're going to work on together, right? And in doing so, although the contract may be smaller, you're going to set yourself up for success because you're able to learn, is this somebody you want to work with or not? That's like a really important part of the business. Is you also don't want to get stuck in a business relationship with somebody you don't want to work with. Yeah. It's like a long-term relationship that you just did not want to be in. It's going to take years of therapy to get over that. Yeah. Any questions? Helpful? Yes? Cool. Any other questions on this? Yes, no, maybe so.
When you
Yes.
what you just mentioned last, like starting off with smaller milestones, and from your experience, it sounds like if you complete like a phase one of a milestone and you provided a deliverable and the client is receptive of the deliverable and pays you for that deliverable,
Mhm.
but then the client now says, okay, let's take it to phase two or whatever that would look like. Again, I would assume there would be a conversation or a discussion of what phase two is going to entail and what the deliverable is going to be that is building off of phase one's deliverable.
Mhm.
So it sounds like in phase two, a new contract and a new scope is issued
Mhm.
for services that are targeted towards the phase two deliverable. Would that be fair to say?
Yeah, if that's what they're looking for, yeah. You can also do a phase two where you update some of the artifacts, right? And reserve some time for that. Also, this is a really important part, is all these artifacts are always in flux, right? You don't want to say that to people because they don't want to know that. But give yourself a little bit of buffer so that, like, if you get a new insight, for example, or you have a new inspiration, right? Where do you provide the flexibility for that, right? So especially in doing creative work, which is a little bit different from like a home, right? Like once you build the foundation, like you can't just, build a house and like, I need to do new piping, like, right? But for creative work, sometimes like personas, journeys, strategic, heuristic assessment across the landscape, you might find new things. Not being able to put it or like slightly update it is not going to be the best for you. So add a little bit of buffer, and maybe it comes in like the wireframe or like the phase two items. Just like think in the back of your mind. You don't have to be, again, you don't have to be overtly transparent in the
Mm,
scope beyond what you need it to be clearly defined,
yeah.
right? Like if I'm selling you a cup of coffee, is it worth me to define every single ingredient in that coffee and charging you and writing an item out for you, right? you're gonna be like, this is a lot more work for me to digest, right? And so
Mm.
again, it's really based on this balance of what is it that you need in the contract that's the most important for you to agree on, right? That's the most important. What are the points that you need to agree on to move the needle? And then you can maybe add a little bit of detail here and there that will help to strengthen that agreement, right? So it could be if you want just this number and this milestone, and that's the thing you agree on, great. And if you need smaller milestones, great. But adding all these extra things, sometimes too much detail doesn't allow you to be more flexible in the project itself too. So you can catch yourself in this box you've created around yourself.
Some clients are just like the other aspect, like they know
Mhm,
what they want. And like this last one wanted a website, and
mhm,
he is a landscape architect. So he's basically showcasing
mhm.
his projects and his services and what he does, his accomplishments
Yeah,
and his work on this business website.
yeah,
That's the end product.
yeah.
Where in retrospect, I felt that maybe I should have done a little bit better is that not, I did provide that deliverable to him and it was successful deliverable.
Mhm,
I just wish, or I should have made mention that in the proposal, it should have been a contract, that he has some responsibilities too. And that's one
mhm.
thing, because I'm not providing this content, he is. I
Yep.
am not his business, he is. And number two, back to what I was saying earlier, like they know what they want. Like if it's a website and it's like, I need a website that's a mobile responsive and I need it also on desktop and laptop. That's pretty much it. And then I will come in and be like, well, I need a issue. Well, I need a, I, beyond my sort of interactions or basic interactions, I need to know a little bit of discovery. And that's where it's not treacherous territory for me, but then it becomes like education for them because I'm like, I don't know your business as well as you know your business. So I need to come in and first understand how your business, what your business is, how it operates, and what are your sort of like, higher level sort of business goals, I would say, in relationship to this deliverable. Because I am not going to just waste my time and just throw things on a website wall and call and polish it up for you, because that's
Mhm,
not going to help anyone else. That's not going to help any us out at the end of the day. And then I won't do like the entire UX scope. I'll be very particular of the sort of spectrum of the UX scope, but like they don't, like I had to, especially with this one, I had to show him like I need to do a journey map from a user looking at your website. I know I'm going to do this on CMS and that's going to be my playing field, but like you need to know how the user is starting and where they're ending up and how they sort of start and conclude and exit the page and what they're actually seeing. And that's more of a discussion between me and you, and then maybe I'll come with a deliverable with that. But what I'm trying to say is that sometimes educating these clients in just like the necessity of doing that, that goes way over their head. Or they're just
mhm,
like, I just need a website, like I don't need this journey mapping, I don't need
mhm,
this user flow. And it's just like maybe one interview, one user flow, then low fidelity wireframe. And that's all I sort of need for like, at
mm,
least if I'm thinking out loud, for like a website project for like
mm,
a small business.
mm. Yeah,
There's no question in that. It's just
yeah,
my thoughts.
yeah. I have some thoughts too. What many aeons ago, I mean, this is part of like UX practicum and UX teaching is we're taught that there is a quote unquote right way to develop a beautiful digital experience, right? But at the end of the day, in reality, people have different budgets, people have different needs, people have different knowledges and expertise, right? And you could potentially find somebody who knows the industry so well and just doesn't need some of these things, right? And they'll help you shortcut and bypass the things. And you might have a client that is just not looking for the sexiest design, that they just want it to be functional. And what I always go back to is what does the client really need? Like, ask yourself, really, really need. Go the ask behind the ask, right? Because what they say is not really what they need. It's usually what is behind that ask. Why are you asking me this? Why are you telling me this that you know everything? Why are you telling me this you don't know everything, right? Ask the question behind the question. And in doing so, it will just help clear the clutter for you and to see what is it that you just need to deliver, right? For some clients who just have no idea what they need, but sometimes they're told, oh, you need UX, they'll be looking for UX people, but they clearly don't need it. I'll say, you know what? There's some clients who want to build a blog, but they don't have the budget. And I'll say, you know what? Just go download a template, buy a template off of themeforce.com, put it on WordPress, voila, finished, right? Cheap for you, great for the world. You didn't traumatize any other designer in the process. And that's that, you know? And sometimes doing some of that level setting with clients of just like, okay, if they just need this bare bones, I usually do not take those projects on because it's always ended up in a really bad position because in reality, when it's just something that they don't truly value whatsoever, that they don't care or need any creative direction or any of that, you can, make the most beautiful thing and they're just going to hate every part of it. But in tandem, what I will say is you can work with the process. So maybe you do recommendation for something really simple and easy, right? Sometimes when people are like, oh, why can people do a logo for $5 but you can't? It's like, one, it's like crazy, Fiverr. But what I'll say is, you know what? My level of expertise is very different from that. And so what you can do is I recommend to them, I'm like, use them. Go ahead. Use them. Go at it. Go to town. I will be here and I'll help you advise you once you figure out all that, right? And so sometimes what I'm also doing with clients is I push them to do the table stakes stuff themselves. Also, it's really good, right? That if you give them some of that homework, and you see them follow through with it, you know that they're going to be somebody that you're going to want to work with, right? So that's again another point of sussing out the right people, and you don't want to have these like headache clients. It's not to say that you have to shove away all businesses, but again, I'm not saying one way is right over the other, but these are just different tools to suss out the right partnerships and the right people who are going to uplift you and your work. At the same time, you don't have to touch everything, right? There can be other people responsible, or it's already set up that is taken care of. And what you want to come in with is the more senior expertise, the leadership, the person who's going to push it beyond, right, what is a template. And that's what's going to sell your creativity versus sometimes this table stakes stuff is, oh, Squarespace, where I'm like, okay, yeah, here, go, here's Squarespace, here's login, just go make an account, play with some of the templates. And once you feel comfortable in there, then maybe we can work together and I can help you explain, right? What is the strategy behind it? And then it's usually when people realize it's so fucking crazy and hard, then they come to you with more like, oh, save me, you know? Yeah, sorry. I got really excited. But that also took me a long time to learn because I was trying to take in like every single project, right? But the big learning to me was I can actually use what exists in the market in tandem with my offering, right? And that becomes really powerful. So maybe, or maybe you are the person who sets them up on Squarespace, right? And you create this to be a packaged experience and you sell this package to people. So many different ways you could go about it. But I would say to sum up all of that is use everything that's around you and be really flexible with yourself, your offering, and be willing to learn like what is it that you're going to resonate most with? Because business is out there. Reality is we're in an industry where digital is going to become more pervasive, more prevalent. Everything is going digital, right? You're going to have apps, you're going to have websites, but as more products around us are going to go digital, you're going to have interfaces that are going to have development on them, you know? And so with that is the more flexible you can be will allow you to be more open to different types of opportunities that can blossom in your foray. Yeah. Yeah. Any other questions? Okay. We have 8 minutes. I had like a whole personal finance section. I'll just like skim through real quick. Okay, cool. So personal finance. So it's like you have all this money. So what do you do with it? I'll go through it pretty quickly. Don't know if anyone is managing debt or working with student loans, but I mean, for the longest time, I was dealing with it. But here are some of the key highlights of different strategies that people have implemented that I've learned about along the way. One is called the Snowball Method, but essentially it's picking one loan at a time, tackling it. If you have different budgeting systems and machines that you use, applications, you can also tackle it one at a time. But the idea is to simplify the portfolio of all the different debts that you have. You can also consolidate, reduce rates, depending on how you've paid off debts before in the past. And then the rule of thumb that generally helps people is 3% is the rough value that people equate to inflation. So if you have more money that you're paying, right, the rate of your interest is higher than 3%, then you better not save money because your that money that you have is actually getting eaten away by this interest rate. Does that make sense? Because sometimes the big question is people are saving money, but they still have a loan, right? Like, I don't want to get rid of my savings to pay off this loan. But if the loan is eating away your savings faster than the rate in which your savings is depreciating because of inflation, you're actually sitting on money that's literally eating itself away. Does that make sense? Okay.
Yes, but you still need an emergency savings.
That is true. Yes. Yeah. I mean, it's all like, right. It's different umbrellas. What is it? In terms of emergency savings, yeah, I would say, again, it's like with a grain of salt too, because I've seen some people go really nuts with like emergency savings for like 12 months. But oftentimes when you lock up money in there, you also lose foresight into different investment opportunities, right? With mutual funds and all these different things. And so, yeah, for sure. You also don't want to be putting yourself in a position, right, where then you're taking on and incurring like more debt because then you ate away at everything that you had to flex between. But generally, I mean, some financial analysts say the younger you are, you can actually get away with a smaller emergency fund than the older you are because your flexibility to adapt is much higher in propensity when you're younger, which is an interesting theory. Yeah. So there's a few different budgeting methods, and these are different applications, but the two broad budgeting method is active versus reactive budgeting. And why budgeting really doesn't work for many people is because you're usually in the reactive lens. A lot of people say, oh, I'm budgeting with Mint, but you're just reacting, right, to what are the transactions that are happening. And active budgeting is really setting forth like, hey, this is how much money I have. This is how much money I'm willing to use and spend. After that, zero, right? And so if you're finding budgeting is not really working well, maybe see where you sit within the spectrum. Let's see, summarizing in short, track your finances regularly, whether it's weekly, monthly, set up a relationship with it, right? And I would say money is really a mental thing. Sometimes we're like very fearful of it, but what I always say is it's just there. It's whether you want to look at it or not. So the sooner you can just, build a relationship with it, it's going to be very, slow and steady. And once you do, possibilities are limitless, right? The big rule of thumb, again, spend less than you earn. And so don't play the whole keeping up with the Joneses thing, because at the end of the day, here's the truth. There's always going to be something that's more expensive, more glamorous, more lavish, always, right? And there comes a point where you just gotta say, whatever. You enjoy that, spend all your life savings on that. That's just not what I'm about. One of my mentors had told me, start with the end in mind. too. So what is that goal that you want to accomplish? What is it that you want to get to, right? But it's not the house that you want, right? It's usually what you want, the experience of that house. And you can also deconstruct that and work a little backwards from there. But figure out what is this ultimate life goal and what do you want to spend your time doing? What do you want to spend your life doing? And then use your money towards it. Oftentimes, the biggest hemorrhage to our budget is the small transactions, whether it's subscriptions, fees, memberships, whatever, they amount to a ton. And so, really, it's the coffee principle where it's these little things are the micro daggers that are poking versus these larger transactions, which we're actually much more cognizant of. And then also see yourself as a business, see yourself as an entity, invest in yourself, right? Rather than investing in other people and like presents, like sure, you can do that within reason, right? But education, life experiences are really beneficial to expanding your awareness of yourself, the people around you, and the outside world. This is going to help you pay dividends in which you're going to shape how you want to live your life and create the relationships that you want to. But again, within reason, right? And books, again, are just so low cost, but have such a huge amount of wealth. I always recommend to people if you're seeing yourself like always trying to like pay for all these like e-courses and all these things, just start reading books and start buying books instead for like $15. You can have so much more information than somebody's like $5,000 e-course. Most of them are like MLM schemes. Multi-level marketing. Investment 101, I would say two parts here. Really, it's this game of is it pre-tax or post-tax? And just like simplify it here. Post-tax is you pay tax on it today and it's in your retirement today so that you don't have to pay taxes later in the future. Again, it's with the end in mind, meaning how much money are you realistically going to spend every year, right, of your life? And how does that compare to where you sit now? And then the second part is diversify your investment. And so I put a little order of priority here, meaning as you're starting to save money and also manage debt, the first one is you want to have a little bit of savings, right, which is to live on for a few months, right? So that you can pay rent, you can pay for things, car breaks down, you can cover it, right? The next thing is you want to put additional money beyond a few months into a vehicle that is liquid, meaning you can dip into it, pull it out right away, as that amount right away, that gains a little bit more interest. Some people like using money market funds. And then after that, if you have more, you put it into illiquid investments, which could be stocks, houses, stuff like that. You can't pull immediately, but has a different way that they're diversifying their value. Some people are putting into certain crypto coins, but basically the less savings you start off with, my recommendation is the more liquid you can make it, the more safe it is for you. But the more liquid it is, the less risky and more rewarding it is, possibly. And so here's some of my personal finance resources that I really love that's really shifted my mindset. Some books that were really influential. The Psychology of Money, that one was really about how we think about money, very similar to The Soul of Money, and this is a relationship we have with it. Again, it's just a really mental thing, and while we might think it's a barrier to us knowing our worth, right, it's also us having this relationship with this concept of valuation in denominations of money, let's say. And then one I like love-hate relationship with is Secrets of Millionaire Mind. It's not like I don't think everyone needs to be a millionaire, but it's just some of the ways in which it's a self-talk in the book that I think was a really interesting reframe of how we see ourselves and value. Yeah. Some online communities, I absolutely love Reddit for this. My tip also is if you ever search anything on Google, just throw the word Reddit in and Google will just scour Reddit for anything related to your search. And so sometimes I've searched stuff related to business, finance, anything with the word Reddit in Google, and it just spits me so many great resources. And then other websites, YNAB is also another really great software. You Need a Budget. They have a great blog which breaks down different ways of spending, financing. Boggleheads is the founder of Vanguard, the investment firm, who has a blog that writes all these different ways of investing. And if you're going into investing into stocks, how you start to think about that. And two podcasts that have been really great. So Money podcast with Farnoosh. I don't listen to anymore because it's kind of elementary to me now. But for anyone who's starting, just really, really great plethora of just how to get started with money and just thinking about managing your money. And then Planet Money podcast is actually on the flip side, just really interesting reframe of this concept of money. Has some history lessons in there and all these other things. One thing, I think this is really important. I should have spent some time, but just like wrapping it up, is this concept of community activism and money. And oftentimes we work really hard, especially with white institutions, take in money, but immediately as we take in the money simply exits out of our system directly back into white institutions. And so a big part of activism is this conversation of how do we take away white institutions from the process of money that we're inheriting, that we're grooming, so that we can consciously grow our communities. And the first one is direct action giving, meaning we're directly submitting money to the affected community or individuals. You might see this as Venmo, Cash Me app links, but the concept of it is taking third-party mediators, which are often white institutions, out of the flow so that money can go directly into the people who are affected. And this is also part of nonprofits and white nonprofits specifically who hemorrhage a ton of money to pay salaries, to pay celebrities, all that. And then the next one is conscious community spending of when we spend money, who are we spending it on, right? And do an assessment matrix. And again, you don't have to go through all your spending. I get it. It's like a lot, but just do an assessment and just look at what institutions and what businesses you are spending your money on. More often than not, we don't realize sometimes even like 100% of our spending could be directly with white institutions. And so we work so hard to make the money, yet all these traps exist around us sometimes. Just suck it back up like a sponge. Yeah. And I think it's just a few more slides. Yeah. Then the truth about money. Lastly, here are things that took me a long time to learn. The first one is money does not bring happiness, right? It doesn't bring joy. It's the perception of money that we are chasing. Also, money doesn't represent anything else aside from money. And so to not put people on a pedestal just because they make a lot of money. We also don't know their background, right? Money itself represents freedom and choices, right? And so sometimes we yearn for the freedom and choices, and sometimes we think we're yearning for the money. It's actually completely flipped. And so with that, think about ways that we can use it to enable freedom and choices. Conversely, it's not about buying, right? The shiniest thing, the biggest house, the most expensive car, because think about how that impacts, right? The choices you can make. You have a huge mortgage that you have no money to do anything anymore. You're actually now indebted to this house. It's not a living being. Now you just exist to pay for this physical manifestation of land. It's kind of trippy when you like think about it. And then the next one is money is generational in terms of the way we see money, react to it, respond to it is really based on how we've been raised and the spaces and institutions that we've existed within. And as a part of our work in decolonization is to acknowledge and maybe rewind some of that so that we can be more conscious of worth, value, and all this. And so this is really going back to Ivan's question about like, how do I know my worth? Really, it's this work of decolonization and really removing institutional colonialism from this aspect of money so that we can become more open-minded to different things that we may not have been exposed to before. Yeah. And also know that because this is the environment that we've been raised in, and these are people who've groomed us to think about money, we inherently will have a predisposition to act that way, right? And so as you're thinking and making future decisions, take that into account. You don't have to base your decisions directly off of it, but it would be remiss if you didn't acknowledge some of the historical contexts that may impact your decisioning in the future. It could be around scarcity mindset, fear, apprehension, anger, right? This emotional aspect we have towards money. Yeah. And what's fascinating too is it's really mental. Money itself has no emotion, right? It like has no feeling. It doesn't react to us. It's not like a pet, we were talking about Neopets at one of our meetings yesterday, but it's like not a pet that like has any, it doesn't do anything for us, right? It doesn't squeal, it doesn't do this. But why is it that we have so much emotion towards it, right? Some people love money more than like a child, it's like crazy. And it goes back to this perception that we put in more than we think. How do I articulate it? We're putting something, a lens on money more than it was there in the first place. And the work that we must do is less around identifying that just explicitly for it, but understanding what is that what is it in which the way I see money have a reflection of myself and the reflection that I have with myself or the way in which I see the world. The relationship we have with money actually teaches us more about the relationship we have with ourselves. It's kind of a trip. Awesome. That's all. Some closing announcements. So this one's really cool. And if everyone can do this, this would be amazing. But for November and December, Hired.com is donating $850 to our organization for every 10 members who register. And so if you want to give back to our organization, you can just sign up here. It just literally just sign up. You get put in our Hired.com QTBIPOC design community. Potentially in the future, we can use the analysis of our community to help make decisions with Hired.com. We don't have enough people yet, but right now, if we have anyone that signs up, we can add more to that pool. Our next UX Nights is in a few weeks. We have the State of Equity happening where we just talk about equity as a whole this year, what's happened. And it's very deep, very interesting. We have a panelist, Maurice, Cherry, Ube Urban, Real Canty, who's from this year, and we're all gonna just sit and have a kiki. We have the next book club happening next week, where we finish reading the last part of Design Justice. Yes, 2 weeks. But for this one, if you haven't read the book yet, just come join the conversation too. It's really deep thought and just like reflection on the design industry as a whole and racial justice. And also we have a Slack community to join, and here's an application link for you as well. Wow, we zipped through it. Awesome. Hope that was informative, educational. Yeah. Yes. Yeah. Of course. You're all valuable, worthy. You just have to figure out how we work within this system. This crazy system. Yeah, for sure. And with that, our space is closed. Kenny, Ivan, any last announcements that you want to share? No? All good? Okay. Like zip through it at the end because we're going over. Awesome. Well, I'll stay on for a little bit if anyone has any other questions. But with that, have a good rest of your evening. We'll publish this on our YouTube and we'll share this out if you want to reference any of it in the future. I don't think everything said was totally PG and good. So yeah. And feel free to join our Slack and continue the conversation as well. More than happy to answer any questions there.